Nikunj, would you say that convincingly now it seems like it's risk on and the risk off game is over?
Okay, now let's look at what has happened. Post the geopolitical tensions and after the US GDP data, the bond yields have shot up. The 10-year paper went to 5%, almost 5%, now it's 4.6. Brent, no, Brent cannot be in percentage, guys. Brent has to be an absolute number. Please take it out. So, apologies. The Brent actually is 96. 96 has moved to now levels of sub 90. Similarly, S&P from the recent low versus now, map at Dow, recent low versus now, markets are making a comeback. You can see visibility and you can see clarity. So the macro scare, which everyone thought, thankfully has not snowballed into a large sell-off. Historically, what we've seen is the last few, the seasonality which is at play in November and in December at play, will that seasonality come back? Let's look at the YTD chart for the Dow and the S&P and the Nifty. The point I'm trying to make here is that given that bond yields have reversed, given that crude has retreated, given that dollar index now seems to be coming down, are we in for a last hurrah before the year ends? Historically, we've always seen the seasonality at play. So is worst of the macro print is behind us. The movement in the dollar index, the sharp spike in the crude, the uptick in the bond yield, the crack in global CBOE VIX, if all those factors have reversed, then do we have a clear line in sight for a year-end hurrah? I think it's point we should start thinking like that.
In fact, if you also club it up, Nikunj, that the numbers overall, there are no howlers actually coming in. Most of the numbers are either in line, slightly tilt towards the positive. That will also improve sentiment here in India.
So, Jay, no prizes for guessing that India is in a sweet spot. No prizes for guessing that numbers were expected to be strong. The earnings season is good. It is reassuring, but the earnings season is not that grand that it'll warrant a big earnings upgrade. So what you need to understand is that the earnings season is simply endorsing what the broader tone of the economy is and what the broader assessment is. The trick now is that where will the fillip for the market come from? And will the fillip from the market come from local cues? I doubt it very much because you don't have too many large global cues which will generate upside momentum. So it has to be global cues. What could come from global markets? Well, we've already seen a retreat. We've seen that seasonality tends to kick in the month of December. And I doubt that if you've seen this kind of a sharpest reversal in most of the risk on indicators, then we actually are unlikely to see any deterioration. So the case I'm trying to make here is that are we in, I'll say it again, are we in for a last hurrah courtesy what has happened in the global market? We've been hunting for this trigger. But is it time to start thinking on those lines? Is it time to start saying, okay, I'm going to start going long again. I'm going to be, aligning my portfolio for a global push. Because if globally things come back, which they are coming back, and history has told us that November and December, and especially the month of December always tends to be the seasonality at play. Yeah, so are we in for that seasonality? Because data seems to be indicating that rally aane wali hai.
That's a very important point. In fact, yesterday we were discussing in the REIT meet that in the last 10 years, there have been, in fact, out of the last 11 years, 10 years, we've seen November ending on the positive.
Historically, you always see seasonality. Yeah. The case for the seasonality is always made when you see movement in dollar index, global VIX, crude, and which way flows are moving, and yields. All those factors have suddenly reversed. So I'm just saying it again. Sorry, I'm sounding like a parrot today, but I'm just getting this thought, and I'm getting this, purely if I pour in my years and years of, experience as a market commentator. I think you could just brace yourselves for maybe some global infused rally now.
Global infused rally, yes, and you're forgetting the domestic factor of elections, and 6 months ahead of elections, we see that rally also coming through. So looks like that stars are aligning, whether you call it the global arena or the domestic factors as well. But pretty much just wanted to highlight that for last week, India has been a bit of an underperformer actually. If you look at NASDAQ, that's actually managed to gain 4%, whereas Nifty has been flat. S&P 2 managed to gain 3.7%. So there is that kind of, room probably available for us to catch up as well. And that catch-up support can also be coming in from the earnings as well as, Ajay was pointing out. While Tata Motors also was on the number side, not as strong a number coming in this quarter. But of course, the big question is the commentary, and that is what has come in strong. So this time, the revenue was pretty much in line with expectation with a 32% growth. The EBITDA actually came in line with expectation. Margins were, however, slightly lower, and that's the reason the profitability was a smidge lower versus our expectation. It came in around 3,700 odd crores. But the commentary again is very important. They are aiming to deliver a stronger performance in the second half of the year. The guidance of JLR EBIT margin has been now increased to 8% versus 6%, and even in terms of the net debt, they are likely to reduce as less than to £1 billion by FY24, and that too is an important factor. Nikunj, Tata Motors of course has run up on all of these cues as well. While of course there's an upgrade in guidance, it's not completely new news. We know there is a restructuring and an improvement underway. What do you think it will do for the stock prices from here on?
See, Tata Motor already has seen multiple triggers which have played out from where the stock was versus where the stock right now is. I guess, first markets were confused about the China factor and the JLR business. But the reverse has happened. Operating leverage benefits have kicked in. JLR margins which had plummeted, they are now marching towards 8%. The domestic EV space, I think they are clearly moving, really in the right direction. What really could be the trigger? Well, if you're talking about the near term, it may not be a trigger, but the near-term narrative, it would be listing of Tata Technologies, which is subsidiary of Tata Motors. Let's see how that progresses. B, they've lost market share in the CV business. Are they likely to regain it back? And C, are they, the markets have got much more than what they ever actually thought they will get from the management of Tata Motors. Big turnaround in Tata Motors, delisting of the Tata Motor DVR, and then Tata Technology IPOs. So the sequence of events in last 12 months for Tata Motors really they've delighted and surprised everybody. That sequence of event is unlikely to continue. So then what happens next? Well, a little bit of adjustment because of Tata Technology IPOs, and then markets would look at incremental earnings now to really make a view. I think at 600 plus, Tata Motors, in my book, I think it's fairly priced. The P expansion has happened. The re-rating, which has been the Jacob effect for Tata Motors, it's been the stock of the year, that already has happened. But now I think it would be a function of how things would move on the earnings front and what exactly is the progress for Tata Motors, even on the EV business. From JLR, I think the attention will come to EV. In
fact, Nikunj, the first deal which happened with the PE players for the EV business, there's another one which was in the works, and the widespread expectation was that it will happen at 10, 15, 20% premium to the previous deal. That deal hasn't come so far. So that is something also, one of the monitorables.
See, we were very clear at the beginning of the year that Tata Motors will be stock of the year. So it has actually translated the way we thought.
Yes.
And let's look at the sequence of events. I'm just going to say it again. At the beginning of the year, nobody expected that they will take Tata Technologies public. Nobody expected that the JLR turnaround would be so solid and so strong. And nobody actually thought that they would even consider a DVR buyback. They've done the following, and the stock's gone up. Now, what else can they do? I don't think in terms of a corporate announcement, you're going to get too much now. So Tata Technology is incremental because of sum of part. So now for Tata Motors, what would move the needle? Well, it really has to be how the earnings progress. And if they come out, let's say 2 quarters ahead and say, we are preponing a net get guidance, if they do it, then markets will say thank you.
Which they have been talking about in the last 2-3 months.
But they've not made it official, but the numbers indicate that they should do it.
60% on a YTD basis. In January, I remember you were clearly making the point that Tata Motors could become, and it's only, we are in November, 10 months. 60% in 10 months is not bad.